scaling up sustainable capital markets, there is certainly demand. We're seeing key sustainable bonds covered with demand 10 times the issue size. We have the new NGEU facility, ONFIF talked about in detail last week, from the European Union, about to issue a third of its €800 billion program as green bonds, for example. The UK DMO has just launched successful green gilt, and France, Germany, Italy, and others also have green bond programs underway. You'll notice a European emphasis here, but we'll come back to that. 90% of sovereign green issuance is European so far. But other parts of the world are on the move as well. Nigeria has issued a green bond, for example, and corporations have noticed the available greenium that exists for now too. There are still problems. The NGEU green bond can't quite use the EU green bond taxonomy yet, and we'll talk about that. Aside from standards, definitions, due diligence, and ratings, there aren't full liquid yield curves in these assets yet either, and we'll take a look at that. And also there's the potentially murky world of transition finance to explore arbitrage between a proliferation of standards. Nevertheless, these markets are really on the move after many years of debate and talk. We've got an excellent panel here to explore these themes with. We have Ida Creevy, Director of Capital Markets at the European Investment Bank, a long-time advocate for this area and a pioneer issuer in it, and it's great to have you back again, Ida. We have Flora Chow, Global Head of Funding at the IFC, International Finance Corporation in Washington, D.C. We have Thierry Delongmar, Special Advisor for Financial Affairs of AIIB. To the president there, that's the Asian Infrastructure Investment Bank. And we have Marcus Pratch, Head of Sustainable Bonds and Finance at DZ Bank in Frankfurt, who also advises our Sustainable Policy Institute that's hosting this meeting today, and is a regular contributor here. So welcome everyone, thank you for joining me. I want to take a quick look at the state of the markets that I've just mentioned, and then we'll explore some of the issues and challenges to spur them on even further. So now that sovereigns and supers are regularly issuing sustainable bonds, as I've just highlighted, I wanted to know whether we think that we've reached the necessary inflection point, long waited for, on liquidity in these markets, which will enable issuers and investors to operate in them with ease. And so have these markets gone mainstream yet? Marcus, you watch these markets and an intermediary bank for many of these issuers. Have these markets hit the inflection point that we've been looking for?
I mean, we can say compared to the overall fixed income market, the sustainable bond market is still a small but shiny light, and we see very, very good growth rates, especially this year. We have seen green bond strikes back. We have seen other segments of the market like social and sustainability bonds getting tailwind even or due to the Corona crisis. So I would say we are on a good way to become mainstream. Of course, liquidity has increased over recent years. We can see this in many ways, I would say. For example, if we look at scale in terms of issuance, volume, and product type, which are a telltale sign of a growing market and increased liquidity, both measures have grown steadily so over recent years. On the other hand, we can also look at the average size of transaction. Yeah? Since the market has been opened by European Investment Bank in 2007, we have increasingly seeing an increase in the sizes of the transactions. And another sign, of course, is the globalization of the market when it comes to market liquidity. Last year, for example, we have seen issues in more than 30 different currencies. Of course, the euro and the US dollar being the main currencies, but we see a lot of diversification in the market. And increased liquidity is also correlated with investor demand, and we see a more and more growing investor demand. You see, normally sustainable bond transactions are heavily oversubscribed and more oversubscribed than plain vanilla equivalents. But of course, we have to differentiate a little bit between the segments in the market. I mean, the green bond segment, which is the most matured in the market, I would say it's already at the edge of the mainstream. And in social and sustainability, we maybe need some time, but we are on a very good way, I would say. Then there are this, let's say, new segments. There is target link financing emerged since a couple of years. In this segment, liquidity is still very low, I would say, at the end of the day. But overall, we are very confident that market is increasing. And as I always said, sustainable finance or sustainable bonds will become the new normal in the future.
Okay, and we are seeing very large coverage ratios for these bonds. Does that represent a much greater demand than supply, would you say, Marcus, or is there some other market dynamic taking place there? We're seeing 10 times on many of these bonds.
Yeah, I mean, definitely. Demand is increasing. Then you have always, of course, the discussion of who is benefiting from the market, the issuers or the investors. And we have seen in, let's say, for example, if we look at the green bond transaction, we have seen at the beginning, of course, the issuer was, let's say, benefiting due to the greenium. On the other hand, in the long-term development after the transaction, compared to the traditional bonds, the green bond did much better than the traditional one. So investors were benefiting in the second step of the way. So all in all, it's a very good dynamic in the market.
Okay, thanks, Marcus. I'm going to have a quick tour around these very important issuers as well, see how it feels for them. And we'll come back to the greenium point in just a moment, so that's important too. Ayla, I mentioned that you were a pioneer in this market. Marcus just reminded us of that. You're already finding other things to pioneer in, such as DLT. So one wonders whether that's a signal that you think these markets have now gone mainstream, particularly green bonds, since the topic today is climate.
Well, yes, us being engaged in other things as well absolutely does not mean that we have abandoned this area either. I would say that it's if we talk about EIB, it's definitely mainstream. We have said that by 2025 we will do half of our lending already in climate and other environmental projects. So if that's not mainstream, then I don't know what would be. So for us it is. For the market in general, I pretty much agree with what Marcus was saying. That the amounts are still, compared to the whole market, are small, but then the whole market is largely about US Treasuries and JGBs and such. So it's a bit of an, should I say, unfair competition as well. But I think when you have, I think all of the large governments in Europe who have done this, UK just did theirs, Canada has appointed their advisors to work on a green bond framework. I think this is pretty mainstream, and at least one cannot really complain that you don't have any liquidity, and these are small things. I don't think, and then of course the Commission's program as well. So we can't really talk about lack of liquidity anymore. It's as much or as little liquid as anything else in this market, which basically means that if you want to sell something, it's probably quite easy. If you want to buy something in the secondary, forget it, you can't buy anything anyways.
Right.
So it's not a question of which product you want to buy. So that would be my take on this being mainstream or not. I think it's definitely taken a big step in these last, should I say, 24 months.
Right.
With so many new large issues coming to the market.
And also the other point on liquidity is, of course, these markets are dominated by central banks, who we've been talking about all day so far today. So they have their effect on what happens to these markets as well, with huge volumes of sovereign bonds going there. So the total net issuance of some issuers going to central banks. Flora, IFC also a pioneer, certainly the World Bank next door, a notable pioneer in markets. How do they feel for you? Do you regard green bonds as an example to set, or as a natural and mainstream source of finance?
So I think green bonds, if it's really what it's relative to. So if we compare green bonds to social bonds or sustainability linked bonds, it is indeed mainstream. And in certain geographies, like in the more developed markets, it again is more mainstream compared to developing or emerging market jurisdictions. So I think that question, it really depends on what we're comparing it to. But in terms of breadth of products, I think Marcus touched upon it, with the growing segments of transition bonds and sustainability linked bonds. You can say that that whole sustainable market is indeed getting bigger. And then geography wise as well, we do see some of the emerging market countries issuing both green and social. And, I think of oftentimes if an issuer issues social, they will have issued green first. It's kind of the first step, but now we've seen even on the social front, countries like Uzbekistan or issue a social bond, and then on the IFC side specifically, I think similar to Isla, we think of ourselves as very much climate focused and sustainability focused. But even in the projects that we do where we're financing private sector companies in emerging markets, we have done more and more green bond investments and social bond investments in countries like Indonesia, Philippines, South Africa, and in Latin America as well. So I think all of that to say that mainstream might be a little bit of a stretch, but we're definitely very close to that.
Okay, thanks a lot. Just to home in on one particular point, let's broaden to sustainable rather than green just for a moment. I know there has been a debate for years among issuers such as yours, IDA, KfW, and others about whether these bonds need to be labelled or not, or whether the investor can assume that they're sustainable because of the nature of the asset side of your balance sheet. What's your view on that?
So maybe I can start, because this is in fact a conversation that we have almost daily in our treasury.
I'm going to come to you on this as well.
Yeah. So, we have seen our peers issue bonds as an institution, labeling them, our sister institution down the street, sustainable development bonds. And we've seen a lot of our, like I said, our peers do this. And so this is something that we, IFC, are looking at as well, because at the end of the day, you look at the investors. Some investors can buy only labeled bonds. Others, sustainable funds, will say, we know IFC and our mission is sustainable, and we have these frameworks in place where every project we do goes through a rigorous E&S due diligence, and so we don't need a label. We're okay to buy IFC. So it really is investor specific, and what we'd like to do is, of course, try to satisfy the various investors' needs. So to that end, we do think, or we will continue issuing green and social, specifically labeled bonds. Right. But then for the remaining part of our program, is there a way we can, I guess, label it to be more all-encompassing? And I would say that it's very much in discussion right now.
Got it. Just before I move on, what proportion of your issuance would have specific labels, would you say, either green or
green and social? So it varies from year to year, but I think 10 to 20% of our program having a green or social bond label is where we're at. Of course, it depends on our pipeline on the business side, but that's roughly the numbers we've seen in the past years.
Okay, but you'd argue that the other 80% is implicitly so because of the activities of the bank.
That's right. That's right.
Okay, I'll come to Ida on that as well. So I know the EIB has useful things to say on that. But first to Thierry and the AIIB. Tell us about your view of the whether we've reached the tipping point in the SSA markets for green bonds, or not. It's no longer a gimmick, dare I say, and then your specific relationship to it as an issuer. Over to you, Thierry.
Thank you, John. So first, let me comment on what you said regarding the central banks. It is quite obvious that the exceptionally loose monetary conditions have helped facilitate high level of liquidity in the sustainable green bond markets. So that's first observation on what you said.
Yep.
To complement what Ayla, Flora, and Marcus have said on the market themselves, I would like to say that trading both ways and hedging in these instruments are not an issue anymore. They were a bit at the beginning, but not anymore. So maybe that addressed the questions about having reached the tipping point. I think we have.
Right.
But there is a challenge with regard to these securities. It's the lack of investors willing to divest from them as they attract very strong demand. So there is an imbalance between offer and demand in that particular market. With regard to AIIB, as we are quite new, we are different. And maybe I'd like to address the question about labeling. We have decided to never label or differentiate our bonds from those who would not be labeled sustainable to those who would be labeled sustainable, because we consider that all our bonds are sustainable. And this is because all our investments and loans are complying with an environmental and social framework that the bank has approved in 2016 when it started. So we don't differentiate. And that is a major difference with sister institutions who have legacy portfolios to take into account. And one last point I want to say is that we have talked about the major currencies and major markets, but we are also involved in pushing for domestic currency sustainable bond markets. And we have issued last year a 3-year, 3 billion RMB Panda sustainable bond. So I thought I would make that point because I think it is also important to focus on domestic markets and not only on the global markets.
Thank you, Thierry. We're going to come back to that in a moment, specifically the development of developing market issuers here. I do want to go back to Tyler briefly on the labeling issue, and we've had an excellent audience question on that, which I'll come to as well. But first, Tyler, to you on the labeling issue, what proportion, for our audience's benefit, of your issuance is labelled and which not? And would you say implicitly that all your issuance is sustainable, as many development banks do?
It used to be around 10% for the two products of our annual funding program. Now it has been recently closer to 20 because we enlarged some of the eligibilities. Now, I said earlier that we have made a commitment that by 2025 we will do half of our lending in climate projects and then other environmental areas where the projects bring a substantial contribution. So it might be pollution, circular economy, and so on. And the other half should also follow the logic of the EU taxonomy, which says that you should not do any significant harm, whatever you do, to any of the environmental objectives. And as you may know, we already decided in November 2019 to get out of all unabated fossil fuel financings. And we put a very high price on carbon anyways when we appraise our projects. So I think we could claim with a very good conscience that everything we do is sustainable, and we can even sort of prove it. But we see value in these label bonds. Yes, I think that if you have the kind of, the World Bank's, IFCs, AIBs, EIBs of the world, they probably get easily the benefit of the doubt that what they do is sort of a good quality. But if us multilaterals had not started this market, would this have come from the corporate sector, from the emerging market sector? I actually doubt it very much. So I think the fact that people like us who have the resources, both the technical resources and the people resources, to develop new products, which are a bit much work perhaps to develop, it has shown the way, and then other people have jumped on the bandwagon. So there I see the value. It's the same idea as we have had with this blockchain bond. I mean, it is a huge amount of work for a 100 million 2-year issue, which funding-wise, of course, is just nowhere. But that was not the point with that either. So it's a little bit the idea that, okay, we are a public sector institution. We have to do some work that maybe the private sector doesn't do, and because we can. And that's why I think we will still stick to the labeled products. just because we think that there's still more to give to the market in terms of developing that product, not because the rest of what we do is not sustainable. Like I said, it is, and we can even sort of prove that in a fairly transparent manner going forward. So that's our take on it, that it's definitely still worth continuing.
Thank you. Just over to you on this point, Marcus. In listening to these development banks talk, if you wanted to be devil's advocate, you say you actually don't need a labelled market for these types of institutions who are doing important development work. What's your view on that? You may need labelling for other kinds of issuers, but these issuers who've got important sustainable bond programs, perhaps they don't even need the label for those. Mm-hmm. It causes such heartache, that discussion, anyway.
Mm-hmm. I mean, honestly speaking, we can say, especially promotional banks or development banks, they have sustainability embedded in their DNA. So everything they do, everything they finance is sustainable in a certain way, green, social, and so on. But there was already made the point when it comes to investors. And there we will see more or less three kinds of investors in the market. The first kind of investor is looking for use of proceeds vehicle, really looking at what is financed with the bond. The second one is more or less investors who are looking at the sustainability of the issuer as a whole. So they would also buy a traditional bond as long as the issuer behind is sustainable. And then we see more and more investors looking at both things, saying, okay, it's very important for me that we have a sustainable issuer at the end of the day, but we would like to see it combined with a use of proceeds vehicle, hence a labeled bond, either green or social. So I would say at the end of the day is the investor who makes a decision.
Okay, but you're optimistic that they'll solve all of the issues around taxonomies, standards, ratings, due diligence, data provision, all of those things for the labeled products at investors?
I mean, data is, of course, always the big topic, but I mean, I see transparency is increasing. I mean, with the ICMA Green Bond Principles, we already had very good guidelines. These are now followed by the European Green Bond Standard and the taxonomy. Of course, there is still some work to do. There is an ongoing workflow, still some question marks and some black boxes. But I mean, markets will develop. Now, I mean, starting from next year, we won't only see pure EU green bonds. There will be also other labeled green bonds, but it's okay for investors. I mean, look, there is not enough supply in the market. There is still a very huge demand. So both kinds of bonds will coexist in the market. And over time, there will become a kind of common language in the market. And it's an educational thing. It's also with the investors, they become more educated, also more educated on analysis, on data, on taxonomies. So it's an evolving thing at the end of the day.
Okay, thank you. I'd like to, on labelling, ask this question from the audience, and I'd expect diplomatic answers from all of you, but I'm interested in all of your answers on this. This is from JP Craven, an investment management associate at BlackRock, important agent in this market. One criticism of green bond markets is the ability for corporations, sovereigns, and other entities to issue green bonds for specific projects while maintaining separate funding avenues for browner projects. We've implicitly just addressed that. Is it a concern that green bond issuances would then be mispriced, and how do you factor risks from the whole funding picture into the pricing for green investments? In other words, I think he's saying, will sovereigns arbitrage the demand in these markets disingenuously when you take into account the whole picture of their activities? That would be my rephrasing of that question. I'm going to turn to you first, Thierry. What do you think about that?
I think that at the beginning, there was a price differentiation, but things have evolved in favor of the sustainable bonds and the green bonds. And frankly, in my view, this is the responsibility of the investor. They are the ones who decide, which, by the way, means that labeling is not necessarily a good solution. Because when the issuer labels, it drives the investor in a direction which may be different from the objective of the investor. So the investor has to decide whether it is green or not green. it has to decide whether the price is correct or not, and whether they should accept to get a haircut or a premium. So at the end, the market decides, and most importantly, the investor decides.
Do you mean, so Thierry, I think you're saying you don't just have to do your due diligence on the asset in question, you have to do it on the issuer in the round, which is what the question is asking, I think. Is that what you're saying?
I'm saying that it's yes. It's you can rank the things. I mean, the issuer would be ranked first, and the use of proceed or the asset would be ranked second to the issuer.
Okay, good. All right. What do you think about that, Flora? The questioner suspects that sovereigns may follow a faddish market and perhaps will dupe investors potentially regarding the overall picture of their activities to chase a price advantage.
I was going to say the exact same thing that Thierry said, that it ultimately what we've seen with investors and the kinds of questions they've been asking us as a supranational, and also questions that we see being asked to corporate issuers, it's the same for sovereigns, that it is not just tick the box exercise. This is a green bond, we'll buy it. They'd absolutely look at the issuer. They ask very specific questions about what do you call it, like things that may not look ESG, and we'll get specific questions, on a specific project, for example, so that I think investors are doing that level of diligence. And I think, we may talk a little bit more about the data that is needed for investors to make this and how make these decisions, and how to make it more accessible to investors, because it does take a lot of resources, but that it is happening. And I think that's the way that's the right way to look at it, so that even if a sovereign issues a green, it might price better than a plain vanilla, but ultimately the investors are looking at more than just the label.
Okay, thanks, Flora. Isla, I'd imagine agree with that. You've essentially just been saying it, I think.
Yeah, most of it, yes. Well, I would agree with that, but just to add to that I think it is. A few years ago, it was enough to have a one green project, and then that was it. One did not really question much what you did with the rest of your activity, and it was the same thing. Did not matter if you're a government or corporate or a bank. Now that has clearly changed, as Thierry and Flora were saying, and people are looking at the entire business of you. But I think when you do something which is labeled, whatever the label is, it's kind of an open invitation to challenge you. So if I'm a corporate or a sovereign and I'm issuing a green bond, I'm telling investors, I'm doing green, so now challenge me. And if they have tough questions and they disagree with what I'm doing with the rest of my activity, they will do so. These investors that we speak to, they can be very, very tough on this. So the kind of questions or the kind of situations where you have an oil company or a very oil focused government doing a green bond for 1% of their capex, and then the 99 remains in brown, that will not fly anymore. So it is kind of okay, I'm raising the green flag here, and now you can ask me anything you like. Of course, you can do that otherwise, but because I'm making this claim, your questions are going to be tougher. So this is, I think, where we are now, and well, we may go. If we are one day in the situation where everything is sustainable for everybody anyways, then there won't be need for any labels anymore. But I think it serves a purpose still. And I don't really think it's so much of a question of this pricing. Yes, for some it may be, but even the pricing differentials, they mostly appear in the secondary market. So the issuer does not benefit from that immediately, other than if they issue several times and then they develop a whole different curve, and then you benefit a little bit from it. Corporates is different. They clearly have benefited more than us frequent issuers do. But that's my take.
Okay, thanks. I think you're saying that these days investors aren't quite so silly. It would be a very simple paraphrasing of what you're saying. Marcus, I've got a related question for you that's coming from the audience. Not exactly the same, but it's certainly on a similar theme. It's from Lynn Johansson, President, Catalyst, E2M, the collaboration question. And she says, greenwashing is something that is undermining the credibility. I think we're not sure that's true, but she says in this case that it is. And when investors are not crystal clear what is green and what is greenwash, what is the extent of the risks? There's a similar question to the one that Ayla was just addressing. What do you think, Marcus?
Mm-hmm. I mean, if you look at the use of proceeds structures, I would say the risk of greenwashing is in a certain way limited, because we have, let's say, clear guidelines saying what is green or what is not green. When it comes now to the EU taxonomy, we even have defined thresholds. Yeah, so the more or less ICMA green bond principles are added by some certain screening criteria, which makes it at the end of the day also a little bit more clearer. I agree when it sometimes comes to the so-called target link structures, where the use of proceeds might be used for general purposes. We have to take really a closer look, especially at the KPIs those issuers are using, because you should not use any KPIs which are far away from your core business. Yeah? You really have to choose relevant core material KPIs of high strategic significance of your core business or of your future operations, should be measurable, externally verifiable, and also be benchmarked. Yeah, so it's always, of course, at the end of the day, the decision of the investors to make the decision: do I invest or do I not? I think we already have a lot of good guidelines and handbooks helping us to quantify this. And I mean, transparency has increased in the market over time, which is very good from my point of view. And this is why I'm not such a big, have a big doubt that regulation will really be a hindrance to the market, but regulation in a, let's say, certain way, not a kind of over-regulation, will help to find us a common language and let's say, common set of tools to avoid greenwashing. Yeah. And there is another thing, I mean, we will talk about it later, for example, transition financing. Yeah. Yep. I think there will be kind of two different segments or markets. There will be, from one point of view, I would say, the narrowed sustainable bond market, where we really have defined green social sustainability projects. And on the other hand, I see a chance of a kind of second market, a transition market, where we have, let's say, a little bit more leeway, where more or less the impact at the end of the day, the positive impact or the positive transition path will be, let's say, the key to invest.
Okay, and there, I mean, I think, to put it cynically, there seems scope for all sorts of structuring shenanigans there, but we'll come on to that in a little while. But I think you're saying, Marcus, essentially caveat emptor on behalf of the investor, notwithstanding the point we discussed earlier about the need for labeling or not. So I think you're still saying that investors need to look at these things very carefully. Is that what you're saying, Marcus? And then we'll go to Thierry.
Mm-hmm. Yeah, I mean, at the end of the day, it's really the investor's choice, and it's also a kind of investor's philosophy. As I said, some investors, they very much look at the use of proceeds, others look at the issue itself, and others combine both things at the end of the day. Yeah. So I think there is no 100% solution which fits to all investors. So we need to have some flexibility in the market, but of course we have a lot of different tools to analyze this use of proceeds or the sustainability of the issues, for example.
Although that does lead to an enormous duplication of near identical work in lots of different places, but we can perhaps explore that later. Thierry, you wanted to come in on this.
I wanted to complement Marcus' comments by saying that the question of use of proceeds is also a question of interpretation. And if I take the example of the energy sector, some will argue that a nuclear power plant cannot comply with green principle for some reason. Others may argue that the clean coal power plant complies. To go even further, if you take an hydro project, there are issues of biodiversity, we know. And some will say, well, you know, because of the risk related to biodiversity, it cannot be treated as a green compliant project. So I'm just raising the issue of interpretation. It's not always straightforward whether you can classify a project 1 or 0.
Yes, I'll come to you just a sec. Flora, you'd like to make a point. This 1 or 0 issue seems to be almost impossible to solve, actually. But
yeah, I agree. But just to add, another element is the fact that there is a slew of entities out there that help with second-party opinions, right, with ESG ratings, and there's a lot of debate as to how helpful some of these are, or whether there's any standardization. But just the fact that they exist helps with the greenwashing aspect.
Ayla, thank you, Flora.
First rule: put yourself off mute. Yes, just wanted to comment on that, what Thierry was saying. I think we have a tool for these situations, and that's called the EU taxonomy, I'm afraid, because these were exactly the questions that we have struggled with for years, and which is why the group who was working on this taxonomy proposal invented this, which I think is brilliant. This: you do a contribution here, but that's not yet enough. You should not do significant harm elsewhere. So if your hydro projects does significant harm to biodiversity, it will not qualify. You have to sort out that problem. If you have nuclear, which is the technical experts' response to nuclear was that, well, nuclear is definitely very good on climate because it does not have carbon emissions. But it does have a waste problem, i.e. it may do significant harm on the waste side. And of course, this means that if you have nuclear energy, which would be, for example, fusion, this would be great. It doesn't have a problem with the doing significant harm elsewhere, just as a theoretical example, unfortunately. So I think this logic is great. I don't mean that it's easy to implement, that it is not. In some cases these examples were simple, but in some cases it is complex. But I think the idea, and we heard over the years, well, if you have a solar farm and then the solar panels are produced by child labor, is it then sustainable? Well, of course it isn't. So you do need this other dimension, that even if you do good on this particular indicator, you can't be sort of doing harm elsewhere. And I think that's a very important tool, whatever you call it. And I think China is sort of adapting this kind of a logic as well in their taxonomy, which I think is great.
We have that leads to a very complicated issue around data. Maybe we'll come on to that if we have time. And maybe DLT is the answer to that, Ayla, because you can have a series of qualities and values attached all the way along from asset through to bond, depending on the specific standards. But maybe we'll come to that later. We had a very interesting question in on tightening the goals from 2050. But before we come to that, I wanted to go back to this emerging markets point. I think it's important. All of you in one way or another are dealing with developing markets. And what scope you see for those, for issuers in developing markets to be drawn into the green bond market in particular. I know the World Bank is trying to encourage this. Not least because there's a greenium available potentially, notwithstanding what Ayla just said. Thierry, obviously the AIIB has a number of developing market countries as borrowers on the asset side. What do you see there for them to issue directly green bonds?
It's not easy. It's not easy because many of them have other issues such as core debt management capacity or the lack of proper instruments in their own domestic markets. So we are talking here on local currency domestic markets, which has, as I said, other challenges than the global markets. That said, some of the countries are keen in promoting local currency financing compliant with green or sustainable principle. Why? Because there are more and more local investors, not least pension funds or asset managers, keen to be able to invest in local currency, which are labeled green or sustainable. So there is demand. I think that the issue is a question of infrastructure capacity of the countries and of the local markets. So this is where the IFC has, for many years, been heavily involved in promoting local markets, and where we are also getting, but more recently, involved.
Okay, thanks, Thierry. Flora, I know actually there are plenty of investors who like to follow the IFC around on the asset sides. They think that once you're involved as a lender, they're happy to get involved as well. But that is also a struggle in lots of developing markets, I've heard. What do you see as the scope there for these developing markets to issue green bonds directly?
Yeah, first, thank you, Thierry, for the shout out. We indeed have focused a lot on trying to develop these local currency capital markets, and we do it in various ways. And I think, John, this will also hopefully answer your question. But we try to invest, so we'll invest in a bond issued by a private sector entity, and these can be green or social bonds. And oftentimes it'll be a first in the country, whether it's a green, social, or an example is last year we issued in Indonesia, we purchased an issuance in Indonesia where OCBC Bank issued both a gender bond and a green bond, and there it was one of the first gender bonds in the region. So we do that by investing, but we also do a lot of capacity building. And so we have the technical assistance where we'll work with a client to develop their green or social bond program. And so that we try to also, with the capacity building, grow the markets, especially local currency markets. And then I'd say the third is a little bit, I think, of what you're saying is kind of this demonstration effect. So we come in and we say, we've done the full due diligence, and we say, okay, we believe in this type of issuance by this company, and their investors can join us. And so I guess that would be the mobilization aspect of the work that we do.
Yes, exactly. You're an important agent to spur this development. That's I think what we're saying. I'll come to you, Marcus, in a moment on SSAs in developing markets. Isla, one of the nice things about your bank is to go past a sign next to a freshly created piece of railway or maybe a motorway in a poor part of Europe with EIB funded on the notice next to it. What scope do you see for some of these poorer developing bits of Europe to directly finance themselves from green bonds, in your experience?
Okay, I'm not an expert on them, but clearly we need a green transition everywhere in Europe, and we need it in particular, I would say, in Eastern and Central Europe, where many of the countries or the economies are still fairly dependent on fossil fuel. This is one of the things that the Commission is targeting with their Green Deal and with both the lending and the grants that they are doing with the huge amounts of funding they are raising. In those areas also the just transition, i.e. taking care of those who might lose their jobs or their livelihoods because of such a transition. And that's a big part of the package, be it at the level of governments or corporates or communities of people. So I think whether they do green bonds or green loans or whatever the way of financing, this is a big topic, and I think it's a very good thing that the Commission is putting some kind of a conditionality into what they give, that there must be this kind of investments done. And I think they also want to see no harm done to environment in general, which pretty much then excludes fossil the brownest type of energy. So I think it's good, and this is being targeted. And as we have seen all over the world, this was the first time that any kind of government help or bailout programs or anything were done with some conditionality. And I think this is definitely has been a very, very important change in everything that is going on.
Good. Okay, and we'll come back in a moment to the taxonomy you've just been talking about. I think that's an important thing for us to cover before we're out of time. But Marcus, SSA issuance in developing markets. So you're an intermediary bank. We have seen a few. I'm not sure I'd classify Nigeria as a developing market, but they've had a green bond. What are you seeing outside developed markets? I mentioned the 90% of SSA green bonds coming from Europe, mostly developed Europe. What are you seeing elsewhere, and what scope is there?
I mean, we see definitely increased interest, and in all colors of the market, green, social, sustainability. I mean, it's a natural thing, because I think, the global sustainability challenge is a challenge which knows no borders. Yeah, it's a global, I would say, challenge. So everyone needs to get involved. I agree that in some of these entities, you need education, you need collaboration. Hence, it's very good that players who are here in the discussion round today give their advice, give their education to the respective markets. I think this is very important. Then, of course, we talked about taxonomies. You have to find a kind of common language on what is sustainable or what is not sustainable. But of course, I think emerging markets is where a great opportunity lies, not only in the SSA sector, but also, let's say, for other players. It also holds true for the classical financial sector, or for the corporate sector, for example, because there are, especially when we look at the transition potential of some of these countries or some of these regions, is very, very big. So I expect further hubs of sustainable finance also emerging in this kind of markets. But of course, it takes time. I mean, you have seen it even here in Europe or in the US. The markets haven't emerged or grown from one day to the other. It's always a matter of education, collaboration.
But also, I've heard people are reluctant to set out the expenditure and hassle involved in setting up a new program, getting specific ratings and so forth. Ida was talking about the work involved in setting up new bond programs. To what extent can the developed world help developing issuers get around those problems, Marcus?
I mean, this is something where, for example, incentives could be set. For example, it could be support when it comes to cost of SBOs, that there will be a kind of schemes. So paying the SBO costs, for example, for entities like that. So of course, there's a kind of, I would say, financial aid, but also educational help at the end of the day.
Yeah, okay, good. I want to come on to the taxonomy, but not spend too long on it, because we could drive ourselves mad talking about it. But I think it does need addressing, and also the potential arbitrage opportunities between standards. And we've had a polling result in saying, asking whether we should exclude anyone from sustainable funding, and our audience is exacting. That 75% of them said yes, people should be excluded from sustainable funding. But Ayla, I know you've been wrestling with the issue of taxonomies for at least a decade, if not 15 years or something. Are we there now on a, notwithstanding the nuclear power question we just talked about, are we there now on a set of standards that are good enough to create a global fungible market, do you think?
Well, I think we have taken huge steps in the past couple of years. Whether we are close to a global standard, I would not dare to say that. I think we have the fact that EU started to work on this taxonomy, we have seen, I don't know how many countries or regions are working on taxonomies which are partial or all encompassing, or which are for transition, or whichever purposes. And I think this has just triggered this whole development. And now EU and China are working together in this G20 projects to see what kind of convergence could be done, or common sort of platform. So there is plenty happening there. and that is definitely a good point or a good thing. I'm not sure we even need to have global standards yet, because I'm always afraid of this situation where you want to have the perfect to be the enemy of the good. We can't do anything before we get a global standard, and we will wait 20 years for it, and then we are plus 4 degrees, and it's all too late anyways. So I think we just have to take it as we go. And what I would hope for, my top of my wish list is always to have taxonomy ideas globally, which would be seeing a similar kind of architecture, which would help the comparability, even if the details are not identical. And this is, I think, exactly what China and EU are working on. And of course, and I think the UK approach that they have taken on their taxonomy, although it's not done yet either, is fairly close to that. South Africa, from what I understood, is taking a fairly similar approach. Flora might know more, because I understood IFC is advising them. And then some other countries are taking a different approach, but I think we will see some convergence, but already without convergence, comparability is pretty good.
Okay, and we've had a member of the audience, Xavier Pujos, pointing out that nuclear isn't excluded, he claims, from the European taxonomy because of French resistance to that. So politics, of course, can intrude into these things. So Ayla, you want to speak again?
Well, it's neither in or out now. And actually, nuclear is not out as an energy form like coal is. Coal is out in whatever circumstances. Nuclear is dependent on whether the waste problem can be solved. And that, for that one, jury is still out.
Okay, thanks, Ayla. Flora, you're not responsible for American capital markets. You're specifically a global lender and borrower. However, one audience member, Kenneth Bruce, has asked about the definition of sustainability in the US, where he claims it's much broader than elsewhere, and indeed then potentially open to abuse. We haven't discussed the US much today. What green bond standards might we see there? It's not your responsibility, but you are sitting there.
Sure. So if I think about some of the bigger issuers, like the GSEs that are issuing like green mortgage assets and whatnot, they're not necessarily following more European focused frameworks, but I would say that ultimately, I mean, I think this goes back to our earlier discussion, that it's really how the investors interpret it, right? How the investors look at it. So I don't know if the question is more, are investors in the US perhaps more lax, or their definitions are different, but from what we've seen, I guess in Europe, you definitely see both on the investor side and the issuer side more kind of precise definitions and kind of tighter, let's say tighter definitions. But I'm just thinking, in the US, it is a little bit slower in general, the whole sustainable market. But, we see that the SEC is coming out with some requirements and, regulatory requirements coming through. That is something that is newer for us, obviously, than in the EU. So I think everything, the direction is all going in the same, it's going the right way. But in terms of how precise, I think it really is investor dependent.
I've heard a colleague at the World Bank become irritated with the idea that Europe should proliferate its standards in this regard worldwide, not least because developing markets may have different needs and requirements and so forth. Would you agree with that, Flora, that the European standard, which is most advanced, shouldn't be the global standard?
It's a very I think controversial. Maybe I won't say yes or no, but what I will say is that it absolutely is helpful to have it, right? You have the EU taxonomy, and then there needs to be enough flexibility to then apply it to various regions, various countries. But to have that kind of standard is necessary, and then you have the conversation around it. So does every country or every institution need to follow it to a T? not necessarily, but again, it's the vocabulary to allow us to have these conversations of what is or what is not green.
Okay, that's a good point. I'm going to come to you, Thierry, in just a second. So I want to ask about China as well. But Ayla, back to you briefly.
Yeah, can I just say that the EU taxonomy only concerns Europeans, first of all, and it doesn't say that you can't do something else. You can still do old-fashioned green bonds, the green bond principles, aligned green bonds, and everything else, even bonds which are not green at all. It just says that if you call it a certain manner, then this is what you have to do. If you don't call it that way, then you don't need to care. And that's so it's not trying to rule the whole world.
Okay, it's not extraterritorial. Okay, Thierry, what about in Asia? I mean, AIIB is assumed to be Chinese. That's not entirely true. But let's talk about. And China was quick with green bond standards under the work of Ma Jun. I think he got there before Europe in some respects. So what do we see in Asia with respect to taxonomies? And then, Marcus, I want to come to you about arbitrage between the standards. Thierry.
AIIB is certainly not Chinese, even if China is the main shareholder. I'd like to comment on this by saying that arbitrage between standards would be destructive and lead to confusion as to the criteria that lead to classifying a bond as an ESG issue. As the work of ICMA and other agencies, including the Chinese agencies, demonstrates, it is crucial to build some standards for investors to rely on. So the question is not US or EU or elsewhere, it's global. Those standards should be simple and easy to understand. But for green bonds, this was perhaps a relatively easier task. For sustainable bonds, the scope is broader and hence the task more complex. So we at AIB believe that the UN SDGs are the guiding principles.
Okay, all right, thank you, Thierry. Marcus, I can imagine origination discussions with, not you, but maybe an unscrupulous banker here and there saying, here are Europe's principles, but I've got others if you need them. What do you see as the scope for a race to the bottom on standards?
Mm-hmm. I mean, I expect a kind of, let's say, certain arbitrage in a way that we find a kind of, common language as a kind of overarching framework, but of course with I would call it cultural or regional nuances. I mean, we see nuances in terms of the approach, for example. In some regions, we have a top-down approach. In others, we have a bottom-up approach. This will also remain in the future. Then there is the kind of application. Is it mandatory or is it voluntary? But at the end of the day, I mean, you mentioned China, yeah? This is a very good example. Let's take the green bond principles, for example. When we look at the ASEAN green bond standards, they have been developed in collaboration with the ICMA. Look at China, both the ICMA green bond principles and also the climate bond standard were used to draft the first green bond endorsed project catalog in China. Now China and Europe are working together on this platform to find some common standards. And also I think the EU taxonomy will at least have a, let's say, impact on other regions to follow, to create own taxonomies, to take it as a kind of, starting point to do this. And I mean, we also have to take in mind, there are a lot of non-European issuers who have a big client base in Europe. And of course, for some comparability reasons, yeah, they will also maybe make a kind of alignment to the taxonomy. So I wouldn't see this standard discussion too critical at the end of the day. Yeah, I mean, sustainability is always something with, let's say, individual definitions. And I think this will even remain in 10, 15 or 20 years. But at least we can find, let's say, somehow overarching common language.
Okay, thanks very much. We're just about out of time. A couple of other things I wanted to come on to, but we can't quite make it. However, you've had a very interesting tour of, I think, the principal issues that come up time and again in these markets. And it's been excellent talking to you also, Thierry, Marcus, Ida and Flora. Thank you very much indeed for your time today. OMFIF, by the way, is on the 11th of October, talking with the HMT here in this country, in the DMO, about the green gilt, which again had a massive order book. And we worked with them before they went to market to sound out what reserve managers and the like would think about it. So do come along if you're interested in the 11th of October to hear about that. Coming up next in 15 minutes after a networking break, we have a fireside chat between Anne Simpson and Charlie Penner. So do come along for that. Otherwise, do enjoy your 15-minute break. And thanks again to this excellent panel for a very good tour of these issues. See you all again soon. Thank you.
Thank you.
Thank you.
Bye.